Hello investors, welcome to the channel. Here I talk about long-term investing in companies that pay a dividend. This is known as dividend growth investing. My name is Michael Doan, and today we're going to start off with looking at how the market ended for the week and then look at stock futures. Just taking a quick look at the major indices for the week. For the S&P 500 index, it is up 4.91%. For the Nasdaq index, it is up 3.42%. And lastly, for the Dow Jones Index, it is up 6.81%. The markets are surging this past week as a result of easing quarantine restrictions. The easing of quarantine restrictions have resulted in the rehiring of people for multiple businesses. This means that jobs are coming back and therefore the markets are looking forward to recovering. Now, let's take a look at some news affecting the overall markets. The job reports for May have been announced and over 2.5 million jobs were created as the quarantine restrictions have been lifted in most of the United States. According to this article right here, the America's unemployment rate has fallen to 13.3% from its all-time high of 24%. This was the largest monthly gains in new jobs to have ever been recorded. This recovery process is a good sign that will help the economy rebound from the pandemic. As a result, many people are expecting a V-shaped recovery. However, this recovery is still most likely going to be a slow one and will also require government aid. This article right here shows us some of the reclaimed employment by sector. As shown by the graph, we can see that the hospitality sector of the job market has rebounded quite well. In fact, leisure and hospitality workers made up 1.2 million job creations, which is almost half of the increase. In addition, restaurant and bar jobs increased by 1.4 million as states relaxed social distancing measures. Furthermore, construction was the next largest gainers in addition to the workforce. This was followed by education, health, and retail services. However, there are some experienced job loss such as government agencies, so not everything is going as well as planned. Luckily, as the pandemic winds down, a vaccine is made, and a potential cure is found, then things will most likely go back to normal. In light of this, many people are wondering how the return of jobs will affect stimulus checks. According to this article right here, Democrats have looked at the Department of Labor to see that the number of jobs which have returned turned out to be 2.5 million in the month of May. This means that the return of 2.5 million jobs has brought down the unemployment rate from 14.7% to 13.3%. Because of this, many people are questioning whether this hurts the chances of receiving another round of stimulus checks. It is important to note that although the unemployment rate is lower than before, it is still above 10%. As a result, many people in the country are still hurting financially. Therefore, it is speculated that there will most likely be another round of stimulus checks. In order to help with the process, you can contact your local Congress representative and let them know that more stimulus relief is needed. Just remember, an election is coming this year, so it would be heavily in their best interest to listen to the people. In other news, as many people are returning to work, there are some places that have yet to be reopened for hiring. This means that there are still people who are unemployed and are receiving unemployment benefits. The new aid in unemployment benefits, which includes the additional $600 per week, is set to expire by the end of July. Unless our legislation decides to extend these benefits, many people will be hurting and barely scraping by through the skins of their teeth. As a preventative measure, it is recommended that you contact your local Congress representative and let them know that an extension of unemployment benefits is heavily needed. Again, this is an election year, so it is heavily reliant on the congressperson's best interest to listen to the people who will be elected into office this year by the people. In other news, many franchises are still hurting as a result of the pandemic. As such, many of them still require aid from the government, such as the PPP. In the meantime, many franchises have declared for bankruptcy, as shown in this article. As more companies file for bankruptcy, there will be more layoffs and therefore more job loss. In order to prevent this, businesses right now need help from the government, and this can only be established through the PPP and other business loans. If your business has been hurt by this pandemic, it is greatly advised for you to look for aid from your local governments and from Congress as quickly as possible. There will be links in the video and down in the description below in order to help you with finding aid for local businesses. Now let's move onward to my portfolio to see how it's doing this week. This is my M1 Finance portfolio, and here I invest in companies that pay me a dividend for the long run, as well as appreciate over time. Taking a look at this past year, my portfolio is down 3.67%, causing a loss of about $220. Looking at the past quarter, my portfolio is up 0.48%, causing a gain of about $45. Looking at the past month, my portfolio is up 16.59%, causing a gain of about $13.60. Looking at the past week, my portfolio is up 9.68%, causing a gain of about $8.40. And finally, looking at the past day, my portfolio is up 4.01%, causing a gain of about $3.70. My portfolio is up this week and outperforming the markets. In addition, the dividends that I'm earning through this portfolio are still here, and in fact, if you look over time, they're increasing. Just this past day, I earned about 6 cents in dividends. For the past week, I earned about $8.07. The past month, $58.39. For the past quarter, I earned $109.97. For the past year of this portfolio, I've generated about $260, and it's been about a year since I've had this portfolio. So this earned dividends number is the reason for investing in this type of portfolio. Even in market downturns or market upswings, this number will continue to go up regardless of what happens. And the only reason for this number to ever stop going upward is if all the companies that I invest in suddenly stop paying dividends. Now let's take a look at what this portfolio has done all by itself without me having to put in any more money. So this past week there was one trading day, and according to this, it bought $15.58 from AT&T. This isn't money that I had to put in at all. This isn't my own money. This is money that was given to me by holding all of the companies in my portfolio, and through that, it bought me an additional share of AT&T. And I bought shares of this because it was at a good price for me to dollar cost average my way into my targeted positions. Furthermore, on a fundamental level, all the companies that I hold in my portfolio have pretty solid balance sheet and therefore will most likely have a bright future outlook on their business. All the companies that I hold in my portfolio pay out a dividend for holding these shares, and ideally, these dividends are set to increase over time. So long as these companies pay out a dividend that increases over time so that compounding interest can take effect, then I will gladly continue to buy shares of that company at a discounted price. Now, let's take a look at the dividends that I've earned for this past week. So for this past week, I earned 13 cents from Church & Dwight, 52 cents from Enbridge, 21 cents from NTR, 7 cents from First Energy Corp, 12 cents from Walmart, 18 cents from Wells Fargo, 20 cents from Grainger, 12 cents from Intel, 3 cents from SJW Group, 86 cents from JM Smucker, 13 cents from Trust Financial Corp, 10 cents from WEC, 4 cents from American Water Works, 8 cents from Visa, 71 cents from Valero, 4 cents from Parker and Hannafin, $1.45 from Pfizer, 4 cents from Sherwin-Williams Company, 15 cents from Cogent Communications Holding, and 12 cents from Honeywell International. These are dividends that I earned as a result of me owning shares of each company. This money that you see right here is money that I did not have to put any effort into earning besides clicking a few buttons to buy shares. Essentially, I'm earning money while I sleep. This is referred to as passive income, earnings which are derived from an enterprise like a rental property or a company which required little to no effort to earn and maintain. Although these amounts may seem small, every little bit helps and will eventually snowball into something bigger through compounded interest. This concludes the update portion of my portfolio. Thank you so much for watching this video until the end. If you liked the video, then please give it a thumbs up as it will help the channel grow immensely. If you have any comments or questions, then leave them down below in the video and I'll do my best to personally address it either in the comments or answer it in future videos. If you have any suggestions for me to put into my videos, then please let me know in the comments as well. I greatly appreciate everyone watching my videos. I hope everyone stays safe and I look forward to speaking to y'all again very soon.